And moving on to China, the country is striving for economic recovery in 2023 after the country was battered by its zero COVID policy last year. Now, to do that, China's top economic planner says it's increasing domestic consumption. China's deputy chairman of the National Development and Reform Commission told state media that government investment and incentives will be used to drive up social investment. He said, quote, "We must increase the revenue of urban and rural households. Support should be given to low and medium income families who are more willing to spend but affected more by the pandemic." He believes that inadequate overall demand is the main factor holding back the economy. And earlier, I spoke with Brian McCarthy to discuss China's economic outlook for 2023. He's the chief strategist at macroeconomic advisor firm MacroLens. Thanks for joining me, Brian. Just give us your take. What's your outlook for 2023 for China's economy?
Sure. I think we can expect a fairly rapid bounce back. The COVID reopening is happening apace. I do think the lifting of travel restrictions as of next week is really the final signal that Chinese officialdom is done with COVID. Being a thing that restricts economic activity. So obviously they're dealing with outbreaks of significant magnitude in many of the large metropolitan centers. But, we're hearing Chinese health officials say as many as 50, 60, 70% of the citizenry in places like Shanghai could be getting infected in this wave. It just simply can't last that long at that pace of transmission. So, potential human tragedy in terms of the number of lives lost. We won't get statistics on that. We've all seen the anecdotes of very crowded emergency rooms and crematorium, going 24/7. It's a tragedy what's happening, but it's not going to have economic ramifications because it's going to be over in a matter of weeks, I would think. So we have an early Chinese New Year this year. That will be done by the end of January, and you're going to get China back to work in early February. So you'll see a pretty significant bounce in the economic data for Q1 and Q2, I would think.
So, Brian, basically you're saying because China reopened, it's easing the zero COVID policy. That is the main reason to why you think China will have a speedy recovery in its economy.
Yes. Now, I want to be completely clear. The phrase lockdown is overused. Okay, China has not been in a lockdown for the last, 2.5 years. They have had rolling local closures, most notably in Xi'an and Shanghai earlier this year. I think one of the things that triggered the reopening was that they were getting overwhelmed. Even this Omicron was not suppressible in a winter season, so they were going to get overwhelmed anyway, and they lifted the policy and have decided to let it rip. So that's got ramifications for healthcare. But again, these lockdowns were, I would say, the last 3 to 4 months they started to become very, very disruptive. The other thing that I think triggered the change in policy was this closed loop thing was starting to break down. So it's been 3 or 4 months of disruption. There'll be another month of disruption in January that will lift. You'll get 3 or 4 months of a burst in the economic activity. And then by the middle of next year, we'll be back to the story we were in the middle of 2022, which is China's in a massive housing bust. Their economic model is at an end, and they don't really have any plan to pivot to a more consumption-based, economy or anything else. So I'm looking for, 3 to 4 months of disruption. We've had 3 to 4 months of comeback activity, and then we settle down into a very low growth rate. I do not think anything that's going on in China will have any effect on the U.S. inflation rate, Fed policy, or any of that. This is marginal stuff we're talking about from the Federal Reserve's perspective.
And Brian, on that point, how will U.S. investment in China look like in 2023? Do you think investors are sort of waiting for the economy to steady?
I think the investment inflow picture is much like, the picture with the economic data. So, we've seen a consistent slowdown in Chinese economic statistics, whether it's industrial production, fixed asset investment, retail sales, for the better part of a decade now, fairly consistently. And we know there's been a very significant bust in the real estate market. So you've seen breaks in those data where they look like they've decelerated rapidly at times, but it's impossible to tease out what really has been these rolling lockdowns, what has been just the longer term trend towards slower growth, and what you can attribute to the property bust. And I would say, as regards to multinational investments in China, while when there are lockdowns happening, it's very easy to point to lockdowns as something that's making one wary about doing business in China. But you lift the lockdowns, there's still another list of things making people wary about doing business in China. So, I don't think there's going to be a major sea change in how people view the risks and opportunities of doing business in China. That calculus is just not as attractive as it was 3 or 4 years ago.
Brian McCarthy, Chief Strategist, Macro Lens, thank you.
Thanks very much.